Taxation of Individuals and Business Entities, 2023 edition, Chapter 8, Individual Income Tax Computation and Tax Credits. Learning Objectives. Number 1. Determine a taxpayer's regular tax liability. Number 2. Compute a taxpayer's alternative minimum tax liability. Number 3. Calculate a taxpayer's net investment income tax and employment and self-employment taxes. Number 4. Compute a taxpayer's allowable child tax credit, child and dependent care credit, American Opportunity Tax Credit, Lifetime Learning Credit, and Earned Income Credit. Number 5. Explain how to compute a taxpayer's underpayment, late filing, and late payment penalties. Federal Income Tax Computation 1 of 5. Regular tax computation dependent upon filing status. Married filing jointly, qualifying widow or widower, also called surviving spouse, married filing separately, head of household, single. Progressive tax rates, tax rate schedules, tax tables. Federal income tax computation 2 of 5. Tax brackets or marginal tax rates on ordinary income. 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Marriage penalty or benefit. Who is likely to have penalty? Both spouses receive income. Who is likely to have benefit? One spouse receives income. Federal income tax computation 3 of 5. Exemptions to the basic tax computation. Long-term capital gains, net capital gains, generally 0, 15, or 20%, but can be as high as 28%. 2 different tax rates on one gain is possible. Dividends. Qualified dividends generally taxed at 0, 15, or 20%. 2 different tax rates on one dividend is possible. Federal income tax computation 4 of 5. Kiddie tax. Net unearned income taxed at parent's marginal rate. Net unearned income equals unearned income in excess of $2,300. Federal income tax computation 5 of 5. Applies if child is under age 18 at year end. Child is 18 at year end but earned income not greater than half of child support, or child is over age 18 but under age 24 at year end, is a full-time student during the year, and child's earned income not greater than half of the child support, excluding scholarships. Please review the tax computation example. Net investment income tax. 3.8% tax imposed on lesser of net investment income, e.g., interest, dividends, annuities, royalties, rents, passive activity income, net gains from disposing of property less related allowed deductions, or excess of modified AGI over $250,000 for married filing joint, $125,000 married filing separate, and $200,000 all others. Please review the kitty tax example. Please review the alternative minimum tax formula in Exhibit 8-2, formula for computing the alternative minimum tax. Employment FICA taxes. Employee must pay FICA taxes on compensation from employer, 6.2% Social Security tax rate, 1.45% Medicare tax rate, 0.9% additional Medicare tax rate on salary or wages in excess of $200,000, $125,000 for married filing separately, $250,000 married filing jointly. $147,000 limit applies to Social Security portion. Multiple employers during year. Employer pays FICA taxes on employee compensation, 6.2% Social Security tax rate, 1.45% Medicare tax rate, withholds FICA tax from employees' paycheck. Employment and self-employment taxes, one of two. Self-employed taxpayers responsible for entire FICA tax, employee and employer share, and additional Medicare tax. Tax base is net earnings from self-employment, generally net Schedule C income, and multiplied by 0.9235. Same $147,000 limit applies to Social Security portion. Employment and self-employment taxes, two of two. If net earnings from self-employment is less than $400, no self-employment tax. How does the $147,000 Social Security earnings limit apply when receiving both wages and self-employment earnings in the same year? Wages used up limit first. Favorable or unfavorable for taxpayer? Why? Please review the employment and self-employment taxes example. Employee versus independent contractor. Determining whether taxpayer is employee or independent contractor. Primary question. Who has control over how, when, where work is performed? Tax differences. Amount of FICA or self-employment taxes payable. Deductibility of expenses for AGI from AGI, employer portion of self-employment taxes. Tax credits. Reduced tax liability dollar for dollar. Consists of three categories: non-refundable personal, refundable personal, business. Non-refundable personnel, 1 of 6. Child tax credit, $2,000 for each qualifying child under age 17 at end of year who is claimed as taxpayer's dependent. Partially refundable, fully refundable in 2021. $500 for each other qualifying dependent, not refundable. Phase-out amount, not percentage. Additional $1,000 child tax credit for 2021 only. Additional $1,600 for children under age 6, subject to separate phase-out. Non-refundable personal, 2 of 6. Child and dependent care credit. Dependent under age of 13 or disabled dependent. Amount of credit is based on amount of taxpayers' expenditures to provide care for one or more qualifying persons. Percentage qualifying expenditures. Maximum qualifying expenditures, $3,000 for one qualifying person, $6,000 for 2 or more. Credit care percentage depends on AGI. See Exhibit 8-10. High qualifying expenditures, credit percentages, and phase-outs apply in 2021. Please review the Exhibit 8-10 Child and Dependent Care Credit Percentage Partial Table. Non-refundable personal, 4 of 6. American Opportunity Tax Credit, AOTC, for first 4 years of post-secondary education, for eligible expenses and institutions only. Applied per student. Taxpayer, taxpayers' dependents, third parties on behalf of taxpayers' dependents. Amounts paid by dependents treated as paid by taxpayer. 100% of first $2,000 of eligible expenses and 25% of next $2,000 maximum credit is $2,500. Phase out based on AGI. 40% of credit is refundable, subject to restrictions. Non-refundable personal, 5 of 6. Lifetime learning credit. Eligible expenses, tuition for any course of instruction to acquire or improve taxpayers' job skills. Includes professional or graduate school. Includes continuing education. Apply per taxpayer. Married filing joint, return is 1 taxpayer. 20% of up to $10,000 of eligible expenses, maximum of $2,000. Phase out based on AGI. Non-refundable personal, 7 of 7. Educational credits. If deduct for AGI education expenses for someone, no education credit allowed for that person. Could take American Opportunity Tax Credit for one dependent and for AGI deduction for another. Please review the American Opportunity Tax Credit example. Refundable personal, 1 of 4. Earned income credit. Negative income tax. Must have earned income. Must have at least one qualifying child or satisfy age requirements and not a dependent of another. See Exhibit 8-11. Please review Exhibit 8-11 2022 Earned Income Credit Table. Refundable Personal 4 of 4. Individual Recovery Credit. Credit only applies in 2021. $1,400 credit for eligible taxpayers. $2,800 for married taxpayers filing joint, plus $1,400 for each dependent. Subject to phase out. Taxpayers are not required to repay excess advance payment. If taxpayer receives a lower advance payment than allowed, taxpayers can claim the additional amount allowed as a credit on their 2021 tax returns. Tax credits 1 of 2. Business tax credits. Promote certain behaviors. If credit exceeds gross tax, carry back 1 year and carry forward 20 years. Foreign tax credit. Non-refundable. Carry back 1 year and carry forward up to 10 years. Please review Exhibit 8-13, Credit Application. Prepayments and filing requirements 1 of 5. Taxes must be paid as you go. Withholdings treated as made equally throughout the year. Estimated tax payments due on April 15th, June 15th, September 15th of the current year, and January 15th of the following year. Underpayment penalties. Safe harbor provisions. 90% of current tax liability or 100% of previous year tax liability. 110% for individuals with AGI greater than $150,000. Prepayments and filing requirements 2 of 5. Underpayment penalties applied on quarterly basis. 22.5% of current year liability must be paid in by deadline, or 25% of previous year's liability must be paid in by deadline. 110% for taxpayers with AGI greater than $150,000. Penalty based on amount of underpayment at each quarter times federal short-term rate plus 3%. Prepayments and filing requirements 3 of 5. Filing requirements. Individual taxpayers are required to file a tax return only if their gross income exceeds certain thresholds, which vary based on the taxpayer's filing status and age. Due dates, April 15th, extend filing up to 6 months, may not extend due date for paying taxes. Prepayments and filing requirements 4 of 5. Late filing penalty. 5% of tax owed per month up to 25% if not fraudulent. 15% of tax owed per month up to 75% if fraudulent. No penalty if no tax is owed as of the due date. Late payment penalty. If don't pay entire tax owed by due date of return, 0.5% of the tax owed for each month or a fraction of a month that the tax is not paid. Prepayments and filing requirements 5 of 5. If the late filing penalty and late payments penalty both apply in the same month, The late filing penalty for the month and its corresponding maximum penalty is reduced by the 0.5% late payment penalty for the month. Please review the late filing and late payment penalty example. End of presentation.